So one question, of course, that people have about Bitcoin is, even though it has done very well, the track record speaks for itself. It is also, we know it's extremely volatile. Historically, it's suffered big drawdowns. We don't know when the next one is going to be. In 2017, it peaked around 20,000, got as low as 5,000, I think, March of last year. Is there anything good about holding Bitcoin itself if it's not going up? In other words, during these drawdown cycles, is there anything about the asset that makes it an attractive thing for you to hold?
First of all, it's the hardest money on earth. It's an institutional grade safe haven asset. It's gold without all the imperfections of gold on a digital monetary network that moves at the speed of light that you can program to do 1 million transactions a second. So Bitcoin is digital gold on a big tech monetary network. Why would you want it? You would want it for the same reason that you want to run electric power to your city, or you would want to run running water to your building, because civilization is based on clean energy, clean water, clean communications, clean money, right? It is an extraordinarily important thing. Now, with regard to companies, I think the real issue here is if every currency is correlated to the dollar, right? I mean, they're all trading against the dollar. So if the dollar is weakening, every other currency is weakening, and then every stock and bond and commercial piece of real estate that generates fiat or US dollar cash flows, or any cash flows in a fiat currency, they're all correlated assets, and they're all correlated ultimately to the dollar. So if we create 15% more dollars every year for the next 10 years, right, then you've got to discount the cash flows of every other instrument by 15% a year. And it doesn't take a rocket scientist to figure out that 80 to 90% of the value in those instruments is going to be collapsing if the dollar collapses. So if you want to preserve shareholder value, you have to buy scarce assets. Now, I could look for baseball cards or Picassos or sports teams, but it's hard to buy $1 billion of liquid, scarce trophy assets. So Bitcoin is the most liquid, scarce, uncorrelated asset that you can buy if you're trying to do this in a treasury.
I want to switch gears for a second to another important dimension of Bitcoin. And we're talking here because there's obviously a lot of institutional interest in the asset class, or crypto, however you want to call it. But one of the important things about Bitcoin is that I can send you a payment, or you can send me a payment without the permission of any sort of third-party regulator or bank or entity that could say no. This sort of pure peer-to-peer cash online. From a regulatory or institutional perspective, is there any anxiety about holding an asset which has so much ability to essentially evade censors, evade capital controls, evade taxpayers? And are you worried about that tension at some point down the road, the intersection of institutional holdings and the sort of like original cypherpunk roots of the currency?
I think the underlying integrity of the network, which allows you to take personal custody of your assets, it creates the foundation upon which to create an institutional grade store of value. And without that integrity, you couldn't be sure that your custodians would treat you fairly. But having said all that, I think every institution is purchasing Bitcoin through regulated custodians, and so you're buying it in lieu of gold. Or our choices, if we wish to avoid insolvency, are you buy gold, you buy a portfolio of stocks, perhaps you go and you buy a bunch of timberland or oil contracts or some kind of commodities. Companies have to become asset rich if they're going to prosper and maintain shareholder value. So Bitcoin is the highest quality property that they can buy. As the regulatory environment is already pretty clear on this. I mean, AML, KYC regulations have been applied across all of these exchanges. I think that there's a little bit more parity and precision that will be delivered in the coming 1 to 2 years. I think that's going to be the green light for institutions to invest 10x to 100x more into Bitcoin. So I think it'll be good for the industry. in general.
Let me ask you, you know, if a CEO came to you and maybe they weren't that tech savvy or whatever, they said, how should I want to buy some Bitcoin. I don't know how to hold it. How do you hold your coins as a company? Do you have access to the private keys, or does it make sense for companies to just hold their Bitcoin with a third-party custodian?
No, I think for any kind of, for a private or a public corporation, if it's really a corporate entity, it makes sense to use an institutional grade custodian, and there's a good dozen of them that you can choose from. If you go to our website or go to hope.com, we've got interviews with 10 of the more notable ones in the marketplace. I think that the use of Bitcoin for institutions is they're going to access it through derivatives. They're either going to buy funds that are backed with Bitcoin, like Grayscale or other kinds of funds. They may buy the underlying asset through an institutional grade custodian, but they'll fundamentally work at those three levels. I think that there are individuals will want to take personal custody of their Bitcoin, and there'll be other entities that do that, and they're the minority, but they provide the integrity to the system that keeps everybody else honest. And I think that's the important role they play.
We just have a couple more minutes. I want to ask you, you've done a few convertible debt offerings, and the pitch is someone buys convertible debt from you, you buy Bitcoin. If that sends your stock price surging and your stock has kind of become a Bitcoin proxy, then the debt converts, and that's a great trade. If Bitcoin falls, then there's safety because you also have your business intelligence business undergirding the value of those cash flows. Is there a limit to how many more of those offerings you can do, or do you see yourself continuing to sell more convertible debt to buy more Bitcoin, and how much could you see yourself doing?
Our company has two strategies. One is to grow the enterprise software business intelligence business, and the second is to acquire more Bitcoin. And we've been pretty clear that we'll consider equity and debt financings or sweep cash flows we have into buying more Bitcoin. My view is Bitcoin is the underlying base layer of an emerging digital monetary network. If I told you that one day there'd be $100 trillion market for timberland, you might want to buy timber. And if you knew there's $100 trillion market for any other asset, oil or diamonds or name it, you'd want to buy a bunch of it. So we believe there's $100 trillion total addressable market for a digital monetary network. It makes sense to buy as much of that asset class as we can. We think it's
so should we expect more convert offerings in the future?
I think we just evaluate the market, you know, and our view is look for anything we can do that's accretive to our shareholders. And there are circumstances under which there are things that are accretive, and there are circumstances under which I wouldn't think so. And so you just have to stay tuned on that.